Well, the Reserve Bank has had an inflation target for decades, with the board focused on keeping inflation within the 2 to 3% target band. Now, following the RBA review, this changed very slightly, with the board now aiming for the midpoint of this range at 2.5%. For more on this, I'm joined by Brian Redican, Chief Economist at the New South Wales Government's Treasury Corporation. Brian, thanks for your time. What are your concerns with the RBA aiming for 2.5% as an inflation target?
Well, I think when we look at the world around us at the moment, one thing that people constantly say is just how uncertain things are, and that they expect more volatility, both in economies and in financial markets. And I think that presents particular problems to central banks, particularly if they have a very narrow inflation target. And I think when things are so uncertain, it actually makes a bit more sense to sit back a little bit and accept a little bit more volatility in inflation rather than try to respond to every little bump and wriggle along the way.
So is this sort of causing a bit of confusion then for the overall market?
I think that's exactly right. So previously, the Reserve Bank was happy as long as inflation started with a 2. So really it didn't matter if it was 2.1 or 2.9%. That was around about 2.5, and that really didn't have any malign effects on the economy there. But I think the problem with just focusing on 2.5 is that if the RBA's forecast is for a little bit below that, just even 2.4%, then suddenly there's pressure on the Reserve Bank to actually cut interest rates to try to get it back to 2.5%. And I just don't think either their forecasts are that accurate that they can predictably say where inflation is going to be in 2 years' time. And secondly, whether that constant nudging of the interest rate is actually going to result in more volatility in the economy rather than less.
Yeah, it's obviously really hard to predict what's going to happen over the next couple of years when it comes to rates and inflation. But what about the RBA's just economic metric modelling in general? Do you think that could be improved in any way?
I think the Reserve Bank has top-class staff working for it, coming from the best universities around the world. And they're also very critical of their own forecast there. So they don't present them as 100% accurate forecasts of where the world's going to be. They're cognizant of the weaknesses that they have, and they do regularly review them. So this is not really a criticism of the Reserve Bank's forecasts. It's really just, setting a standard that's far too high for any central bank to achieve by, perfectly forecasting inflation at 2.5% in a couple of years. And I think the other thing I would add here is that the kind of economic shocks that we're seeing hit the economy now are different from those that we've seen in the past. So previously, back in the 1990s or the 2000s, the economic shocks were mainly to the demand side. So for example, when the global financial crisis hit, there was a shock to bank lending. So the banks were really reluctant to lend. And that meant that demand for things like housing or business investment really got hit there. And that's where central bank policy is actually very effective in stepping up, supporting that demand and offsetting the impact of the economic shock that came through.
But overall,
over the last couple of years, we've seen...
I was going to say, overall, though, the RBA review has been pretty good, though, hasn't it? We've got press conferences now after every decision.
Yeah, so certainly things like transparency, I think, is a really positive step forward there. But again, I think the Reserve Bank needs a bit of slack in terms of delivering on inflation that's low and stable, rather than holding them up to a standard which I don't think can be achieved over time.
And what are you expecting next week? Do you think the RBA will cut rates?
Yeah, I think there's a really strong case for the Reserve Bank to cut rates next week. We have seen wages growth step back from where it was over the last couple of years, and it's much more consistent with seeing ongoing inflation at around about that 2.5% level. We've seen actual inflation also pull back. And on the consumer spending side, things have been a little bit softer as well.
Thanks for coming on the show. I'm sorry we have run out of time.
Thank you.